So I guess we're already live.
Okay.
Yeah, happy to see all of you with us together. It's another Emerge Live stream that our audience is watching on YouTube. And thank you for joining us tonight. I'm Stacey. I'm the program director of Emerge. And I'm responsible for the program and speakers at the upcoming conference in Istanbul. And just to give you an overview of why we are here tonight, this Emerge Live series of streams is kind of a teaser of the program that we're going to have in Istanbul. Today we're going to talk about the state of the investment industry and the challenges that investors face on the path. And that's why I have these wonderful speakers with me today. They are going to be speaking at Emerge Istanbul, so please join us there. You have several kinds of tickets that you can pick on our website and join us at the conference in Istanbul in just a couple of weeks, I guess, 3 weeks maybe. So today I have EGOR ABRAMOV, the general partner of Contribution Capital, with me today with us, and LALE GÖZÜBÜYÜK. She's the regional director and country manager Turkey at Plug and Play Tech Center. Thank you so much for being here with us today and for talking to me. Yeah, and maybe we'll just start with each of you just briefly describing what you do and your background so that the audience understands.
Perfect. Thank you so much, Stacey. I mean, I jumped in, but should I go first, or Igor, would you like to start?
Oh, please go ahead.
Okay, thank you. Yeah, it's great to be here. And in fact, I'm looking forward to the actual live event and obviously the streaming as well. Yeah, just a bit about me. As you said, I'm a regional director at Plug and Play Tech Center in the EMEA region, and I lead our Turkish operations and help with the business development in the EMEA region. It's been almost 3 years since I joined Plug and Play. Do you guys hear me, by the way? You're freezing. Oh, okay.
No, everything's fine.
Okay, perfect. And before Plug and Play, I mean, I brought an AI firm, an AI unicorn into Turkey. I was leading their Turkish operations and there for almost 3 years, 3.5 almost years. And before that, I was in finance, you know, good old hardcore banking and a little bit of wealth management there. So if you count all the internships and the MBA time, almost 10 years in finance, mostly spent in London, a little bit time in Switzerland, in Geneva. And I have an undergrad degree from University of Oxford in the UK, and I have an MBA from IMSEAD. And yeah, also currently I sit at the board at Logo Software. It's the largest publicly listed software company in Turkey. I'm an independent board member there. So very nice to see you, meet you. And yeah, happy to be here. Thank you.
Wow. That's great. Yeah, my name is Igor. I'm a GP at Contribution Capital. It's a VC fund investing in Web3 infrastructure companies, early stage in the United States. And so I'm a crypto guy here. Ask me about crypto, whatever you want to ask. Like before that, I was a principal at a classical Web2 VC fund, like $500 million under management, and we invested in SaaS, B2B startups in the United States and Israel. So the most classical position you can imagine. We have a technical background and economical background. I also had a venture capital executive MBA in Berkeley. I'm a CFA, like certified financial analyst. So I'm a financial guy. Also can ask me everything about the financials. I like it, you know, Excel, PPTX presentations, all sorts of things. And I guess that's it. I like sailing. I sail a lot. in Turkey. So I'm also from Turkey. I'm based in Istanbul as well. So great to meet all of you guys in Istanbul.
And a wow to you as well, Igor, of course.
Amazing. Thanks so much. And I also want to just give a quick overview of what's going to be in Istanbul. So Igor is going to conduct a scale-up cases review. And we will soon announce this activity, and you can, if you're a scale-up with a scale-up ticket, you can apply for this activity. And also there are going to be Web3 debates around the Web3 economy, also hosted by Contribution Capital and EGOR. So please register for those as well. And these activity is also going to be announced soon. And LALE is going to speak about the current trends in investment industry on the main stage of the conference. So yeah, join us there. And switching to today's agenda, first question goes to LALE. So you're originally from the investment banking field, as you mentioned. Then you managed the Turkish branch of a company that develops an AI platform, and now you're in the VC industry. So how does it feel to have such a diverse background? Does it affect your approach as a VC investor in venture investing? I mean.
Well, that's a good question. Thank you, Stacey. I mean, it looks diverse when you just focus on the titles. However, I mean, Igor can confirm some of the stuff I'm going to say. They complement each other. Having the kind of financial investment kind of background is a very solid, in my opinion, foundation to any kind of business you're going to do. It all comes down to the concept of arbitrage. And if you genuinely understand the concept of arbitrage, then something opens up in your brain. Like you can spot value everywhere. It doesn't have to be just, stocks, bonds, startups, houses, whatever. It applies to everything, even when you're buying lemons. It's just, a muscle that you develop. And that builds up very strongly in investment banking and finance, especially if you're working in markets. In my case, I started my career in markets in equity research initially, so building company valuation models, and then to equity sales, where you're exposed to a lot of information. You just see people buying, selling stuff, and you kind of question the reasons why they buy, why they sell. That's like, we've talked about AI. That's like, if you see yourself as an AI, machine, this is all data. It helps your algorithms make better decisions. This is all inputs. And with that kind of information, you end up making more informed decision about investments in general. And this is one aspect. The other aspect about investment is that, be it, again, stocks, bonds, startups, houses, lemons, whatever you invest in, investment as a concept has its own underlying fundamentals. So there are a lot of core concepts that apply to everything. Obviously, each underlying asset class has their own specialization, but the core concept of financial valuation, time value of money, weighted average cost of capital, risk management, portfolio management theory, these kinds of stuff apply across all the asset classes, including startups. In fact, startups come under alternative asset classes, and even according to some theory, Igor, you did CFA. CFA assumes venture capital comes under private equity, by the way. So it's a sub-asset class under private equity. A lot of the commonalities in investment. And then moving on there, this helps having the basic underlying investment theory. But AI, how did it work? How did it help me to work in an AI firm? It was a startup. It was a unicorn based in Washington, D.C., valued over $1 billion at the time. So basically I built its Turkish operations with a colleague of mine, and it was first of all, startup experience. We understand, it helps you understand how to interact with the entrepreneurs, how in terms of understanding how startups operate. So when I talk to a startup myself, there's a lot of empathy that I can feel. I can see the struggles of the entrepreneur, it helps especially in this asset class, because it's very human intensive industry. So you analyze a lot of the stuff. There's very little information available about most of the investments you're making. So your input is very important. So that having that kind of empathy, that kind of understanding helps you bond better with startups and founders. And obviously, adding all of it together, doesn't matter what kind of experience it is, any kind of experience builds up your relationship management skills, any kind of experience that helps you with, human communication, etc. It's very relevant and valuable. And investment banks are usually very good at that. Like, they train you very well on how to communicate, how to do public speaking, how to, have good relationships with people. So overall, I think they all complement each other, and I'm happy that I've been through all the way. And also in Plug and Play, I should also mention a big aspect of what we do is corporate innovation. We work with big corporates as well as investing into startups. So we help corporates innovate through introducing them to startup technologies. And since I have experience in working in huge corporates, the fact that, I understand how that big machine operates is also very useful when I'm dealing with, C-level executives here in Turkey. It's a bit of a long-winded answer, but I hope it's the kind of answer you were looking for.
Yeah, sure. And switching to Igor, you also have a diverse background, like different kind of focuses in investing. And recently you've just, changed the focus from Web3 to from Web2 to Web3. So how does that feel? And, what has changed in your life and your approach within this?
Yeah, there are a lot of things different in Web2 and Web3, and I just can't think of top 3 that tell. I don't know. Let's say several things. I mean, really, that was strikingly different for me, as you noticed correctly. I made this move just in the last year of my life and my career. So first of all, and when you invest in Web3 projects, you must really understand how Web3 works in details, period. It doesn't work like in Web2 where you was an IT developer 20 years ago, and now you're investing in B2B SaaS, like a cloud, blah blah blah, and you're looking at the team, the customers, whatever you look at, and you do not need to understand how the cloud works, how this IT source code works, etc. And really, you don't need to understand this. The Web3 is a total different phenomena, because in Web3, people are not developing a user-facing applications. They are developing a basic infrastructure. So you must understand how the business concepts work, how the technology works, how and there's different types of technologies when you invest in Web3. So it is like a deep tech plus development operations, and plus whatever technological R&D, blah blah blah, you can think of. So it really requires from you either to be a technological expert, or be a mathematician or developer yourself, or to have some researcher in your team. Okay, no other way to understand if this is a scam and bullshit, versus it is something like worth looking at. Okay, that's the first difference. It's very important. So not everybody can become like Web3, crypto, whatever investor because of that. It's the first one. The second one, you can invest in a pre-seed, you can invest in seed, but after the seed round, like most of the projects just go public. Okay, that's a crucial difference between Web 2 and Web 3. No round A's. I mean, sometimes you can find it, but mostly now round A's. Okay, so the third thing, you're gonna be competing with people with a $1,000 ticket size, and this is because like this industry is originally very democratic, okay, decentralized, and it's easier to start investing. So web crypto is all about investing. So if you have $1,000 in your wallet, you can invest in tokens, whatever. And there are a lot of closed communities of people who invest in projects, and project can easily raise like hundreds of thousands of dollars through these small tickets. And you cannot outcompete them by your ticket size, because at a pre-seed, at a seed, they do not need a lot of money. I mean, the projects, and then they go public. Okay, and the public, they're raising from the same retail investors, same like $1,000 from grandma and grandpa. Okay, like in an IPO, but they can raise billions of dollars. Actually, at least hundreds of millions of dollars, mostly. Okay, it's sometimes happens that they wait until this public offer, but most of the time it happens. So that dramatically difference, right? And differs dramatically from Web 2. I don't know, a lot of scam projects, a lot of fraudsters, whatever. And the thing is, you would not know anybody from this Web 3 sector, because Web 2, Web 3 do not intercept in terms of people. Okay, so forget about your network. You're gonna build it up from scratch. This is the truth of this life. Okay, and forget about the mantra of Web 2 of team, product, market, blah blah blah. Why? Because this just doesn't work in Web 3. Because, and this is very, very interesting, that was one of my most exciting insight I got in Web 3. Because in Web 3, what is the market? Market is your customers, right? Customers, the more customers you have, the more products you can sell. So you calculate the market when number of customers multiplied by average ticket, average check. Okay, but in Web 3, usually your customers, they form the market, and at the same time they form the product. And that's a new concept that you're gonna understand, because just think of a blockchain like Bitcoin blockchain, Ethereum blockchain. Can you imagine a blockchain with no users? So no users, no miners, no nothing. You don't have security. They don't have trustless trust. You don't have decentralization. You don't have a product. So your product is when your technology meets your customers, your user base, and the same user base forms your market. That's why communities here are extremely important. So network effects are everywhere. Okay, network effect of a blockchain is higher than of a social network. It is because network effects, it's not just two-sided marketplace, it's also your product viewed under this network effects. So that's just a few differences. I'm gonna stop here, I believe, but it's so strikingly different from a Web 2, and that's what actually drives me. And I understand why so few of our VCs can start doing a good Web 3 investments because of that.
Yeah, but I'm going to keep asking you about differences. So,
Okay.
well,
Okay.
actually, you two have got different background, different experience, but you have something in common. You've invested and you worked within many geographies, and you have this experience of changing geographical focus and everything like that. So, my next question would be about this, but maybe let's ask LALE first. Yeah, what have you learned from, you've been in the UK, now it's Turkey. So what has changed? What are the differences in investments in the VC markets, in the traditional investment market maybe as well?
Probably let's take them as two questions, because comparing Turkey to the rest of the ecosystem is a question, and then comparing the VC industry to the traditional investment is another question.
Maybe we can keep the VC one, the VC question, because you're both in the VC industry at the moment. So yeah.
Sure. Let's take the VC one. I mean, I mentioned briefly before, core concepts, core concepts of investments apply to all the asset classes, and VCs are not an exception to that. However, obviously you think about arbitrage, you think about, fair value, you think about, time value of money, these stuff, they apply. You need to have them at the back of your mind. When you're thinking about one specific asset class, take equities, just, in order for us to be able to compare them to traditional venture capital, equity funds, you have a lot of stuff that is there for you. In equities, like there's a lot of information for publicly listed companies. You can read their investment reports. There are hundreds of pages. They publish every quarter, annual reports every year. There's, there's a public market, and there's a lot of information coming out from there as well. You see trading data coming out all the time. You follow that. There's a lot of information through speaking to, C-level executives who are professionals who know, very well how to, pass what kind of information to whom. They're all professionals at that. So there's so much information that you can take and use traditional concepts of finance and put it into a model and value them and form an informed opinion about this asset class. And after all the input you have and put them into a model, you come up with your own opinion. And that's a very well-informed opinion because there's a lot of information available. And then you can compare it to the rest of the market and then decide whether you want to invest or not invest, or even short sell. There's a lot of stuff that you can take in, form your own informed information, and then make a very well-informed decision. And there's a lot of liquidity, lots of buyers, lots of sellers. So even if you make a mistake, you can easily get out most of the cases if you follow your timing very well. Most of this stuff doesn't apply to venture capital. So a lot of the stuff differ. I took equities because, startup is also in a company or a company that's about to be formed. Large corporates are more established. They've been around for many years with lots of historical information. So with startups, you have most of the cases, especially for an early stage seed investor. That's mostly where we focus on. We hardly get any data. There's no sometimes there is, but most of the times you don't have any cash flow history. You don't have a lot of revenue information. You don't have all the stuff that you can put into a DCF model, which arguably, I don't know whether we need it anymore or not, but then that's a probably topic for another discussion. You don't have any of that. You just, look at the founder, just have an understanding of the technology. You read about the vision, you've kind of tried to deep dive into what they're trying to achieve, what kind of area they're trying to disrupt, whether you agree with that. So there's a lot of human, your own opinion counts a lot, maybe a little too much at times. And in fact, this might change with the VC industry developing over time and more data becoming available about the behavior of the investors. I think AI will have some role to play here as well. I mean, it's going to disrupt this market for sure. That could be a topic of another discussion. It has disrupted the traditional markets. I mean, a lot of the portfolio managers are unemployed. Our industry is yet to be disrupted properly, and it's going to come. Its time is going to come. Yeah, that's a major difference. The other difference I would say is obviously returns. You don't have a lot of obviously you have this is a high risk, high return asset class. And that means you have to be, and you need to think in a portfolio context. This is a supplement to your traditional asset classes. So this is a return enhancer. You don't take venture capital and think about it on its own as an investor. If you think from an investor's point of view, if you have, let's say, $100, you're deciding how much to put into venture capital versus a traditional bond or equity fund, then you should keep in mind that this is just a return enhancer to support your traditional investments. And on top of it, I mentioned the risk aspect. On a normal distribution curve, a traditional investment aims to have something in between, in the middle, whereas you're aiming here in venture capital at the tail end, at the extreme results. So this differs. So in a nutshell, the very human intensive nature of the business, you focus a lot on the founders, you focus a lot on your own opinions of the industry, you focus a lot about a lot of intangible stuff. And also the risk profile differs by a lot.
Yeah, and speaking of your current focus of plug and play and you in Turkey, how would you describe the specifics of the venture industry there? And maybe, taking into consideration your experience from the UK.
Well, yeah, UK is a super well-developed market in any way. So if you are in it's mostly to do with money, right? If you're a rich country, you have all the funds available to support innovation, to support young people. So that's this very extreme, very separate case, but I don't think it represents the normal. Like neither the Silicon Valley case, neither the London case, these are not, the normal. This is where people, countries like Turkey trying to get to. It's a great benchmark for us, but we are at a very early stage of our journey. We're doing very well, especially since 2017. Turkey is we have started to put in place the right kind of regulations to support the growth of the industry as well. So there's a lot of talent. Education is amazing. We have a lot of great engineers, very bright young people, amazingly entrepreneurially minded culture. So if you come to Turkey, I give this example a lot, but if it's raining, Igor, you've probably seen people will be selling umbrellas on the street. If it's hot, you'll see, people selling water on the street. So it's very entrepreneurially minded culture. So in terms of that, we have the right kind of muscle to be great entrepreneurs. The finance aspect, the funding aspect, we haven't had the sort of snowball effect yet, but it's coming. Take Peak Games, for example. It's, one of the unicorns, one of the 7 unicorns that came out of Turkey. As far as I know, after its success, more than 20 of its ex-employees went on to become entrepreneurs to set up their own company. So this is an example of a snowball effect. The more success you have, the more this kind of examples you're going to have in this ecosystem. And, we have international capital starting to look at Turkey after the example of, Trendyol, Getir, Peak Games. So after, the number of unicorns has started to increase. So we're great at gaming in general. It's strong muscle of ours, and we are pretty competitive at the international level. But on other aspects, I would say we're great at fintech as well, but that stays very local. We create a lot of local champions in fintech. And I guess it's mostly the specific vertical is very well protected internationally. It's very hard to become an internationally strong fintech firm because of the global regulations, because how banks mostly are very well protected by national regulations. But, this is something that's also going to change over the long term.
Yeah.
There's a lot of potential. I think it's a great time to invest in Turkey because, we are behind, but the momentum is there. Unicorns are coming. International capital has just recognized this market. So, Igor, you know this as well. When the market is not that crowded, usually it's a great time to find undervalued opportunities. And when it gets too crowded, you're too late. You might as well go look elsewhere. So we're at that stage in my country, and we welcome investors.
Yeah, and that's why I wanted to address almost the same question to Igor. But Igor, you've switched your focus to Turkey as well, right? Currently, and are you investing in Turkish businesses at the moment?
No, not really. Actually, I invested in European and Eastern European startups and in Israeli and US startups. By the way, I once invested in a US startup run by Turkish founders. So they started in Turkey, and then they moved to the United States. The company's name is Firefly.
Igor, actually, one of his co-founders is a friend of mine from MBA. We sat at the same class.
Wow, great!
Yeah,
wow,
such a small world.
Yeah, that's a Turkish guy, and sorry to interrupt here, but this is a very good example how a lot of the successful startups, unfortunately for now, have to relocate to a more international hub. And, we don't count them as one of our unicorns, but in fact, they are one of our unicorns. We don't count them though.
Igor, from your point of view, what were the geographical differences that you had to deal with, maybe cultural, and also taking into consideration the current, turbulent situation in, macroeconomics and so on?
Yeah, sure. So I never invested in the UK, so I can't tell about UK, but Eastern European and Eastern European startups are vastly different from the US startups, and mostly I would describe it as investor or startup friendly environment. So in Europe, and especially in Eastern Europe, you have a so-called investor market. Okay, and United States is a startup market. At least it was before 2022. Okay, and that means that everything in Europe is investor friendly. So deal terms, deal documents are investor friendly. Time to decision is longer, like months. Okay, 2, 3, 6 months. Valuations are lower, and I mean, VCs even would attract a big four like auditor to make a due diligence before investing in a startup. That's freaking, crazy, insane to see in the United States, but this happens all the time in the EU. So, and that happens all the time. So they are so, a lot of scrutiny there, a lot of very long times to make decisions, etc. United States, on the other hand, they have startup-friendly environment. So startups are going to choose who to take money from. Okay, it was before 2021, including, and deal terms are very standard and very startup friendly. I mean, time to decision is shorter, way shorter. Okay, valuations skyrocket, and VCs make decisions even without a proper due diligence. So that was difficult to believe in, but I'm being a principal at Fortress. We always made due diligence. We are Eastern Europeans. Okay, I'm originally from Russia. Russia is like sort of a European or Eastern European country. Sorry, and we have more or less the same culture of like investor-centric market. So we always do our due diligence, do our homework, but of course not without any big four, with our forces, okay, our hands. And I mean, almost every startup we make a due diligence for, they mention that, guys, you asking for more information than our lead of this round. Even lead very not so often make a due diligence like we did for like a 10 times lower check. And other following investors never ever do anything. Okay, at best they take a due diligence report from the lead, and that's it. And that's insane, because sometimes we just like we reject the investment opportunity because of the not satisfied due diligence. Sometimes startups, once a startup fired their CFO because the CFO just fucked up, okay, with the model. He just forgot about its working capital, its inventory, and they had to raise. As a result of this, they had to raise the round by 10 million, from like 40 to 15 million, because of this element of the model that was fucked up. Okay, and that's what we found in this due diligence, even not the lead. So I mean, why this happened? Because of this startup-centric market, and exactly this led to this overvaluation in the middle of 2021. Okay, because one and only goal of every like VC was to get into an oversubscribed deal. Okay, because if you don't get there, you upset your investors, you're out. Okay, you're dead. Never raise another like funding round from the LP. And all of this ends when music stops playing, and music stopped playing in the end of 2021. So that's why so overhead market. That's why this downturn in the US investing market, the VC market. So, but yeah, I mean, I saw this. Yeah, this happened. This is the most what was different between these two markets.
Yeah, we're running a little bit over time, but I cannot not ask you, Igor, a quick question about your current kind of mechanics of investing, how contribution capital is built. Did you update an investing, like, let's say, method or system, how you deal, based on your, maybe, I don't know, success stories or failing stories?
Had to, of course we had to, because it's a move from Web 2 to Web 3. A lot of new mechanics in this market. So I would say that we get the deals approximately the same way we would do it in Web 2, like from our friendly funds and our network. Oh yeah, also from some closed communities around the crypto world, and yeah, also from Twitter. We have a special by the way, it's not AI based, unfortunately, but it is like automatic software that crawl social networks, mostly Twitter, to find out very early startups that create accounts in Twitter. So we can find a startup that created account just 2 or 3 weeks ago and already start getting noticed. They start getting followers. If we understand, our software understands that these followers are a great minds in crypto. Like, you know, it's partners of good funds, or analysts from these funds, or founders of great projects in crypto, or some influencers, etc. When they starting following this Twitter account, they're starting mentioning the account. This account gets stronger and stronger. We see that, and we're starting monitoring it, and then we contact them and starting negotiating them before they even started raising funds. Okay, that's
it's kind
a very
of like
competitive market.
peer review or something.
Yeah, yeah,
Twitter.
and I mean we get about 100 on average, 100 startups every week by this analysis. It is easier to do in Web3. It's impossible to do in Web2 because you do not have such a good indicator as a Twitter. If you don't have a Twitter, you are not presented in crypto. That's something that everybody understands. And then when you see the Twitter of a company and you understand it is visible, they have visibility into the crypto industry. The second thing you do is you look at on-chain data. I mean, you always can see the real on-chain steps, on-chain data available as a project. Transactions, users, etc. They cannot hide it. It is all transparent. And then you're going to look at not just customers, but amount of capital customers entrust to this company. Okay, if you have an exchange, decentralized exchange, you look at the turnover and how much capital people invest. I mean, just users, not investors, trading over this decentralized exchange. The more capital, the better, and only then you come to the team and listen to all the bullshit they're gonna say about themselves. Okay, and yeah, the last step, you discuss tokenomics, another new word with the team, because bad tokenomics kills good projects all the time. So you're gonna discuss it in very, very details with the team, and only then you put money, and you have only 1 month for it. I mean, 1 month from first contact to wire the money. And just remember, this is at today's bear markets.
Yeah.
Water period of decision making. So yeah, and that's what we have to do if we want to stay at this in this VC investment sector.
Yeah, that's super interesting, and thanks for sharing that. Again, saying that we're running a little bit over time, I have to switch to the questions from the audience that we have. And I forgot to say that in the beginning, that the best question that you are going to pick, the speakers, will get, like, the author of the best question, the most interesting one, will get a free ticket to Emerge. So yeah, let's dive into it.
Wow,
so
I have the power.
Yeah. Well, you're an investor. You've got your power. So the first question, and I'll ask you to be quick with your answers. Sorry for that. The first question we received through the Google form that we spread before the stream. And it is how to decide between funding rounds, raising seed capital with a SAFE note, or opting for a priced round in Series A. The startup already has a well-built patent pending full product in the market, with initial traction generating from 7 to 10K USD in MRR. Yeah, That was the question. So I guess, yeah, how to decide between funding rounds.
Well, I actually would think this is a very specific question and very hard to answer with this little information, and it will be, in my opinion, misinforming if we comment on it. I don't know if you're going to say anything, Igor.
I agree, completely agree.
Yeah. So what I can say is to the author of the question, please come to Emerge, and you can, ask our speakers and other investors. We're going to have a lot of investors attending this question, and they can give you more thorough answer to this. And the next question is from Burak Birand. To LALE. Do you think VCs in Turkey have a tendency to evaluate early stage startups as larger corporations? If so, why do you think that that is? And does Plug and Play have a different perspective?
Okay, that's a good question. I'll be quick. Well, basically, as I said, the core concepts of finance apply to all the asset classes, and VC is an asset class. So, depends on how you look at it, but in my opinion, it is. You have to have some kind of information. You have to put that into a template, and obviously a startup doesn't have as much information as a big corporate, but you still must have some kind of information. And we need to take that and put that into a template, and then use the core concepts of finance, use the time value of money, think about your future cash flow, etc. We have to do that. All I'm saying is we don't have a lot of information. A lot of it is future-based, not historical information. So any kind of financial information is still valuable. Please don't misunderstand that. It's just we don't have much of it. And most of it is just, forecasts. We have to work with that. We value that kind of information as Plug and Play as well. Yes, numbers are important, not to say they're not important, but, people aspects, we care about that a lot. So founders, for example, one of our filters is, we need to have 2 co-founders at least, and they need their personalities, their backgrounds. They need to be independent from each other. We don't like, for example, married couples, relatives as co-founders. This is a very heavy filter on our investments. So we value people aspect very heavily. And then obviously numbers are very important also, but, more soft, more intangible stuff they outweigh in importance at the very early stage.
There's also a question that I guess somehow relates to this one from Fedi. Does Plug and Play invest in pre-seed B2C AI-powered applications?
Pre-seed, yeah. But B2C is it's less of a focus for us, but we still do invest in B2C. We mostly focus on B2B, but funnily enough, our unicorns, some of them come from B2C, so we still look at it.
Yeah, and are Turkish PE and VCs interested in investing in purely blockchain projects? It's the question from Oktay. I guess I was wrong. Are they interested in investing in purely blockchain projects?
In Turkish VC, purely blockchain, well, it's a newly developing area. It's definitely getting some interest. I don't see why they wouldn't invest, but right now, the market itself has got its troubles a little bit. Igor can add to that, but in the long term, I don't see why they wouldn't invest. Yes.
Igor, do you have any?
Now that part is a bit quiet. That's all I know. It's quiet for now. It's on hold.
I don't get what you mean, what somebody mean under Turkish blockchain or Turkish VC investing in blockchain, because blockchain projects are mostly global.
Yeah. Igor, I think what it meant is our Turkish VCs are interested in blockchain companies. I think that I interpreted the question. Yeah, that was my understanding of the question.
So are there any VCs in Turkey that invest in crypto and blockchain? I guess there are. You should seek for it. Just
there are, but it's the stuff. The topic itself is not a hot topic for now. I mean, it's on hold. it probably will be very hot at some point again. But for now, as far as I've seen, it's a little bit less hot.
Yeah, and in which country, maybe Igor can answer that question, which country, it's a question from Kirill, from our chat. In which country is it the easiest to get an investor for a startup at the earliest stage?
Visas for investors. I mean, I'm afraid I cannot answer this. So I know some European countries, it's more a question to lawyers.
Probably.
Did it say pre-seed?
It just says at the earliest stage. Probably that is pre-seed, or maybe
I can say something about
idea.
Play here. We have a program where we invest at the just idea stage, and we can value a corporate at just in a company at $1 million, and then write a check if the idea is good enough. Yeah, we do. You can apply to Plug and Play.
Yeah, thanks.
Country, but we're not that bad.
There's also a question again from Kirill, where to look for a co-founder who will take on the tasks of working with investors and raising money for a startup. I'd say come to our founders session at Emerge and you can look for a co-founder, but you should answer, you're the speakers.
Yeah, but what lady would never invest in you after this? When you tell her that you just found a guy somewhere who is now a co-founder,
yeah,
that's a bad story.
You need to have some kind of a story.
Not gonna put money in your startup after this.
So what should we tell Kirill? Where to look for a co-founder?
Maybe one thing is that the co-founder needs to complement his skills rather than be the same skills. So if Kirill, let's say, is a great IT person, amazing coding skills, very good, super geeky kind of guy, then he needs to find a person that has more of a communication and sales and marketing type of background. That would be a good advice, I think.
Yeah, but Kirill, I guess, is interested in a co-founder who would work with, who would manage investor relations and take, the raising issues on themselves.
School
I guess.
Friends, colleagues. So
right, a call for a co-founder. Okay, and I guess that would be the last question because we're already over 15 minutes of our stream. It's again a question from Fedi. Do you think information asymmetry in the VC space brings up the arbitrage opportunities? It's, I guess, to LALE.
Yes, definitely. So there's a lot of because startups are small, because usually not, thousands of people are researching to invest. So when there's little information available, when there's not too much noise, then a good research makes a great difference. So that's why Igor's, way of doing due diligence, I totally 100% I'm for that.
Yeah, and I would add that,
something to add.
I would add that information asymmetry, it's not about arbitrage, it's about inside trading. So it's
also
VC,
right, yeah.
VC is all about inside trading, and it is
inside
legal.
Trading is a little different, Igor. I mean, we would probably be in trouble if we say inside trading, but say,
it's
so information that
sort of because it's not public, it is legal.
Yeah.
Since you have more inside information about the company that others, you put money, others are praying, you make money, others lose. So that's how trading works of private assets. That's how VC works, and that's how you can extract value from it as a VC investor. Because you trade inside information. You take money from LPs, you tell them I know more than others. That is inside information, right? And then you go to the startups, you try to extract as much information as you can, and then you put money to the best, you give money to the best, And if your information is better than information of others, and of course, if you're a lucky one, okay, you're making money, and your investors are not upset, and they give you more money next time. So yeah.
Obviously, you need to be careful with managing it if you want to stay in the industry in the long term, make friends. So it's better, general advice is better to be fair with the information you have to all the investors or potential investors. In the long term, it's a better strategy than hiding it from some of them.
No, why from, I'm not saying hiding something from investors. I say hiding from your competitors, other funds.
Okay.
You never share your inside information from with other funds. That's why you're better than them. You have best access to best opportunities because you have best information about them. That's what I'm talking about.
Yeah, thanks so much. And for such an extended answer. And we are now, finishing because, yeah, we have to wrap up the session, and we stopped receiving the questions from the audience. And now we have to pick the best one. I know that we had a lot of them, but maybe you remember the brightest one, the most interesting that was for you. What do you think?
I think, was it Burak that asked me the question about whether big corporates are valuing, Turkish VCs are valuing startups like big corporates. That was a relevant question, because Turkish VCs have a different way of, in some ways, I mean, they can have a different way of looking at startups than, other countries, yeah.
Yeah, and Igor, we need to have your version of the best question, but then we'll need to pick one.
Yeah, I would give this ticket, to the guy who needs a co-founder.
Ah.
Yeah, that's a good one.
Right.
Look for one, right?
Should we do that?
I think that's fair.
Yeah?
He really needs it.
Yeah, Lali, what do you think?
100%. Yeah, that's a great thought.
Okay, so that was Kirill, I guess. So Kirill, our team will reach out to you, and yeah, congratulations. So wrapping up the session, thank you all for being so engaged. Thank you, our audience, thank you, speakers, and I'm really looking forward to meeting you in Istanbul. And yeah, I believe that we're going to have wonderful sessions with you, the debates with Igor, and scale up cases review, and the panel with LALE. Amazing. Thank you so much.
Thank you.
Thank you.
Thanks.
Bye-bye. See you soon.
See you soon.